First of all, a very good morning, and very good morning to my friends also on DAS. So, actually, I have learned particularly from gurus like Mr. Negi, of course Sanjay ji, and others, and it has been over say last 5 years we have established exchange, and a lot of things we still are learning. And I will just continue the story which was started by Sanjay ji. Sanjay ji explained so well, so nice, in a nice manner, the whole supply dynamics, how it plays out for a CGD company, and what they should do, they should not do, and that the same thing continued by my friend Anjani, that within that whole chain, whole story, where this long-term fits in and the cargo buying fits in. I will take up another part of a small element which was also said by Sanjay ji, that how, when there is an exchange, basically what you should be doing with the exchange. So and everybody said that CGD is of course going to be the biggest segment in next 2 to 3 years. Today it is not, but of course in 2 to 3 years or 4 years it will be biggest segment. It has got great potential. And if you see any CGD company, their operating expenses, you take 90% or maybe 70, 80% to be coming from the sourcing. And when you are sourcing, of course, the dilemma for all, as has been mentioned by Sanjay ji and Anjani both, that how much long term should I buy long term, should I buy cargo, should I buy short term, and short term also there are many options available. Now all of this has got a lot of dynamics to be studied, and for CGD, of course, dynamics is that you have demand which is having some kind of variation, some kind of growth you expect over the years. And based on that, you take a call. Basically, if you have a demand which is a base demand on which you can purchase long term also, no issue. But for the short term part or the variation part, they need some kind of reliance on short term market. And in the short term also, today we have options. So when we are talking about short term, I'll talk about the exchange. We started this exchange, of course, and in short term also, today dynamics is not on demand side, it's also on the supply side. Because if you see supply, one of the main element of supply is APM gas. And that APM gas itself is now varying. So you are not sure that today what you are getting APM, you will be getting it maybe next year, even next quarter. And that kind of change also have brought a lot of people to rely on short term, because suddenly you will know that your gas supply from APM has been reduced from 60 to 50. So that balance part you have to again go to the market and source from different sources. So there also we come in as one of the source point. So I'll tell you that what we have done in case of gas exchange, how we have brought, how we have modeled this exchange broadly. So basically our exchange, in exchange we have started providing option for sourcing. It can start from day, even intraday in some cases for power plants. But of course CGD may not need that kind of flexibility. But day, daily, weekly, fortnight, month, goes up to 12 months. And in case of formula-linked gas, we have also launched a contract which is for 3 months and 6 months. And of course, most of the liquidity happens on a monthly contract, which is 1 month ahead. But we have seen in last 1 year, lot of contracts which are happening, trade which is happening on day and daily, and also fortnightly. And some few contracts we have also traded on 3 month and 12 month also we do see the trade. Now another thing which we have started, so one is that whatever gas available in the country today, which is freely marketable, that's available on the exchange. So one component is RLNG, which is of course a spot RLNG that you can purchase through exchange. Second component is the domestic gas. Suppose, of course, APM you cannot buy through gas, it's not marketable. But if you talk about HPST gas, then this HPST gas is available through exchange. And in January, August 21, the first ministry allowed domestic gas to be sold through exchange. And of course, they allowed all this gas which is having some gas which is having marketing complete freedom, pricing freedom without any ceiling price, and there is another component which is coming from ONGC and Reliance where there is a ceiling price. And both of these two gases are coming on the exchange, and then good part is that whatever we have done last year we did something like 4.2 CMD, which is equivalent to something like 6 crore MMBTU, and 6 crore MMBTU, out of that 40% of the gas was HPST gas. So HPST gas, of course, is ceiling price that was being sold at ceiling price. The ceiling price comes to something like $10, and of course market price was about $12 to $13. So there was a saving of $2 to $3. So that's what CGD companies have done, saved. And in that particular component also, last year in January 23, ministry again allowed another, they had issued another provision that when you are selling this domestic gas on the exchange, particularly HPST gas, then you have to give priority to CGD. So if you see the last year's whatever sale happened on the exchange, almost 80 to 90% was actually purchased by CGD. If you see this year, since now APM allocation has come down drastically to 50% or so, so then we are seeing that almost complete 100% of this domestic HPST gas is being purchased by CGDs. So that's another area where people, CGDs are making savings as compared to market. And of course, when they want, HPST gas is not available, then they purchase the spot LNG to exchange. And that the options are to now we have about 19 delivery points across the country, which includes all the LNG terminals, except few. All LNG terminals are our designated delivery points, and all the domestic gas sources also are available. And another thing which we did about 2 years back was we launched our own index, and we are sure that most of the industry watches this index. We call it as GIXI, and that GIXI, people use this GIXI as a reference for doing any transaction, whether they are doing transaction on short term or maybe long term, then they keep looking at that price index. And normally our price index is something at a discount to spot WIM, because of course when gas is getting traded in the system, then sellers also offer gas using some portfolio of gas. Not that they are only selling spot LNG, but they are also adding some long-term and then some domestic gas, and then making it a bit cheaper so that it's viable for the industry and the CGD company, and that's being sold. So these two things anyway we have been doing, and we also have launched a contract for small-scale LNG, trucked LNG. Indian Oil has also been using this model for selling. But of course, this particular contract is yet to become liquid. But we are hopeful that as the volumes will increase, as Mishra ji was saying that over a period of time, lot of transport sector will use lot of LNG. And then of course, more of this gas will get traded on our platform. So these were a few things I thought I will share with you. And thanks, Negi sir, for giving opportunity. Thank you.